In this video I'm going to walk you through everything you need to know about trading with trend lines. You'll discover how to plot them accurately and how to apply them to identify high probability trade setups. Let's jump straight in and begin, but before we move forward, if that's something you're into, make sure to hit the like button to support the channel and subscribe if you're new. See you right after the intro and disclaimer. First, let's break down what trend lines actually are. Trend lines are key levels on a chart that indicate the market's direction. We draw these lines because they help identify zones where price action could present strong trading opportunities. For instance, when using a trend line approach, you'll often observe two main patterns as price reacts to a trend line. The first is called a continuation pattern. This forms when price touches a trend line and then resumes movement in the direction of the current trend. The second is a breakout pattern, which appears when the price breaks below or above the trend line, signaling a possible trend reversal. Remember, just because price interacts with a trend line doesn't guarantee a reversal. You should always confirm using other price action tools, which I'll explain later in this video. Now let's take a look at a straightforward way to draw trend lines accurately. A common question from new traders is whether to place trend lines on candle wicks, candle closes, or along the candle bodies. The most effective method is to draw them where they connect with the highest number of touches, giving you stronger reliability. Let me walk you through an example. In this chart, we observe an uptrend since the market is forming higher highs and higher lows because it's trending upward. Your trend line should be drawn beneath the ascending movement, then adjust the line to make sure it connects with as many key points as you can. This helps reinforce the reliability of that trend line. You'll notice some points align perfectly with the line while others don't touch it at all, and that's completely fine because a trend line should be seen as a zone similar to support and resistance areas. Now let's look at another example. Here we can spot a current downtrend as the market forms lower highs and lower lows during a downtrend. Your trend line should go above the falling movement. Again, adjust the trend line to intersect with the maximum number of touches. It really is that straightforward. Now that you've learned how to draw trend lines properly, let's explore how they can help you spot strong trade entries. Starting with the continuation pattern, this occurs when price touches a trend line and then continues moving in the same direction as the trend. But keep in mind, you shouldn't enter a trade just because price hits the trend line. You need additional price action signals to support your decision. A great way to validate a continuation pattern is by drawing a mini trend line along the pullback. This can help you confirm the potential for the trend to resume before entering a trade. Once the mini trend line is in place, the next step is to wait for price to break above or below it, confirming the continuation pattern. At that point, you can consider a buy setup. This breakout is a sign that the trend has momentum behind it, improving your chances of a winning trade. In this chart, we can see a downtrend, so we draw our trend line above the price action. After analyzing the current movement, we spot another possible continuation pattern. The next step is to validate this setup by sketching a mini trend line at the area of the pullback. This secondary trend line helps assess whether the downtrend is likely to persist before making any trade decisions. Once the price breaks through this mini trend line, you may look at entering a sell position. Another effective tool to strengthen the continuation pattern signal is the stochastics indicator. Here's how to apply the strategy. In this example, we identify an uptrend, so we place our trend line beneath the rising price action. As we watch the current movement, we spot a continuation pattern forming as price reacts to the trend line. At this point, observe that the stochastics indicator is showing oversold conditions. Using stochastics here can help confirm the continuation pattern by waiting for the lines to cross back into the oversold zone. Once that crossover happens, you can consider a buy entry. This movement inside the oversold region can signal a reversal in the pullback, matching the continuation pattern based on the trend line. In this final chart, we identify a downtrend, so we draw the trend line above the price movement. After evaluating the recent price behavior, we notice another possible continuation pattern forming as price nears the trend line while the stochastics indicator is currently in the overbought region. Wait for confirmation by looking for a crossover back into that zone. When the crossover occurs, you may look for a sell position. This signal from within the overbought region suggests a pullback is ending, which aligns with the trend line's continuation setup. Now let's move on to the second pattern, referred to as the breakout pattern. This setup appears when price breaks through a trend line, signaling a possible shift in trend direction. However, it's important to understand that you shouldn't jump into a trade just because price breaks a trend line. Such a breakout alone doesn't confirm a trend reversal. You'll need further confirmation to avoid false signals and improve your trade accuracy. To verify a breakout pattern and steer clear of traps, one method is to watch for signs that momentum is weakening before the breakout happens. Take a look at this chart where the market is in an uptrend and we draw our trend line below the move. At first, the price keeps forming higher highs, but when we examine the most recent action, we notice that price starts producing lower highs. This shift suggests buyers are losing strength indicating potential trend exhaustion. This loss of momentum hints at a possible breakout or reversal ahead. When price fails to make new highs, it reflects fading buying pressure. Then as price eventually breaks below the trend line, it confirms the direction change. This scenario offers a good opportunity to consider entering a sell trade to capitalize on the expected downtrend. In this example, we observe a downtrend, so we draw our trend line above the price. Initially, the market was consistently creating lower lows, but then it suddenly starts forming higher lows instead, which indicates a possible weakening of bearish momentum. When the price eventually breaks above the trend line, it confirms the trend reversal. This breakout, combined with the earlier momentum shift, makes it a good time to evaluate a potential buy opportunity and take advantage of the anticipated uptrend. Another way to validate a trendline breakout is by spotting double rejection points before the breakout takes place. For example, in this chart we're looking at an uptrend where price action has been producing higher highs, but as we focus on the most recent moves, we notice the price fails to push higher and instead forms a double top. This chart pattern signals strong rejection in that zone and hints at a loss of bullish momentum afterward. When the price breaks below the trend line, it adds further confirmation of the trend reversal, offering a potential chance to consider entering a sell trade. In another example, we spot a downtrend and draw a trend line above the price action. As the market continues forming lower lows, we also observe a double rejection pattern near the bottom, which points to a strong support area around that zone. Once again, when the price breaks through the trend line, it signals a reversal to the upside. This provides a solid chance to consider a buy trade and possibly benefit from the upcoming upward move. I've just walked you through multiple trend line trading techniques that you can begin applying right now. That wraps it up for today, traders. Thanks for tuning into this video. I hope you found this video insightful and helpful. If you haven't already, make sure to subscribe and turn on the notification bell so you never miss any of our future uploads. We'd love to hear your thoughts and ideas. Drop a comment below and let us know which topics you'd like us to explore next. Thanks for your continued support, and we'll catch you in the next episode.